Good morning everyone, I am Zakia.
And I am Fadi Inkalis, serve you the updated news for 10 minutes. We'll be back and stay tuned. In today's news, there are four major concerns of macroeconomics that we will discuss, which are unemployment, inflation, economic growth, and the exchange rate. Therefore, we come up with a talk to investigate the growth, crisis, and reform of Kuwait from the year 1991 until 2021.
Kuwait economy experienced remarkable growth between the year 1991 and 2008, as evidenced by a significant increase in total gross domestic product (GDP), which went from 11.01 billion to 147.38 billion, led by a thriving oil sector and device investment across sector. Given Kuwait's considerable reliance on oil export, the global rise in commodity price, notably oil, contributed to its 2008 inflation rate of 10.58%. The rapid rise in oil price may have raised production costs and domestic price. Kuwait's strong economy, driven by its oil industry, reduced unemployment to 1.75% in 2008. Kuwait, a significant oil exporter, prospered during this time due to high oil price, which boosts government revenues and investment. Besides that, the exchange rate is 0.26883 due to the global economic environment, oil price, and geopolitical factor.
The growth of Kuwait economy also was impacted by the massive employment in that country. This is because Kuwait labor force grew from around 745,000 in 1995 to around 1.7 million in 2005, a 128% growth over 10 years. Kuwait economic growth became more rapid from 2003 to 2005, resulting in increased government spending on development programs and projects during a period of high oil price. Therefore, the government is surely in need of many labor workers to work on this project since their citizens don't have enough skills to work in the oil industry. During the same period, the Kuwaiti labor force was a minority, accounting for around 18% of the overall workforce. Kuwait's labor force was primarily male, 71%, with 29% being female. Furthermore, employment is one of the major concerns in the macroeconomy. Consequently, employment levels and GDP are very related to a country's economy, and there has been a strong relationship between these two.
In addition, the World Bank report a 174.17 billion GDP in 2013. Oil export boosts Kuwait economy. According to the Central Bank of Kuwait, 92% of export are crude and processed oil. Kuwait top 5 trade partner account for over 80% of its export, concentrating its export market. The year unemployment was 2.62%. Kuwait is resource-rich nation, and high oil price likely boost economic growth and government spending on infrastructure and public service. Much of the workforce would have been employed by this economic activity. Kuwait low unemployment may be due to the population growth and labor market dynamics. Kuwait had 2.68% inflation in 2013, and average 2013 Kuwait exchange rate was 3.5229.
The effects of the global financial crisis spread to Kuwait's economy in 2009, primarily through a decline in oil prices and production, a staple of Kuwaiti economic growth and government funding, and through the global liquidity shortage. The concomitant fall in investor confidence helped trigger a sharp reversal in real estate and equity valuations, which weakened the Kuwaiti financial system's balance sheet. Kuwait's GDP growth was slower on 2009 with the onset of the global financial crisis and of global economic recession, which saw Kuwait's crude oil production fall to about 2.3 million barrels per day. The result was a sharp correction in unemployment and inflation rate to 1.64% and 4.61% respectively. Additionally, oil exports shrank sharply by 40%, and even though imports of goods and services fell also by almost 25%, Kuwait's current account surplus declined from 40.5% to 23.6% of GDP.
So next, in 2014-15 was the major challenges for the Kuwait economy. The sharp decline in oil prices from over 100 per barrel in mid-2014 to below 40 in early 2016. Fiscal balance which turned from a large surplus of 26% of GDP in 2013-14 to a deficit of 18% of GDP in 2015-16. The government had to resort to domestic and external borrowing, increasing its public debt from 4.6% of GDP in 2013-14 to 18.6% of GDP in 2015-16 because of the fiscal gap. The external balance turned from a surplus of 40% of GDP in 2013-14 to a deficit of 4.5% of GDP in 2015-16 because of the fall in oil exports. The central bank had to intervene in the forest exchange market to better the peak, depleting its forest reserve from 34.4 billion in 2013-14 to 28.2 billion in 2015-16. In terms of real economy, the growth rate of 6.3% in 2013-14 to 0.6% in 2015-16 due to the construction of the oil sector, which shrank by 1.8% in 2015-16. Lower oil prices reduced the profitability and incentive for oil production. The non-oil sector also declined from a growth rate of 5.8% in 2013-14 to 2.4% in 2015-16. The unemployment rate increased from 2.9% in 2013-14 to 3.4% in 2015-16, which more affected the young and female labor force. The inflation rate increased from 2.7% in 2013-14 to 3.4% in 2015-16 because of the higher import prices, as the exchange rate will amplify the effect of the depreciation of the US dollar against other major currencies.
The COVID-19 pandemic have left indelible mark on the Kuwait economy, prompting a swift government's action in a response to the unprecedented global crisis. In late February 2020, Kuwait, as the world watches, became the first nation to fully close its border, implementing stringent measures to contain the virus. The sharp decline in the global oil demand due to the lockdown and the travel ban took a toll on the Kuwait export profit and the government's income. Macroeconomic indicators painted a challenging picture, reflecting the severity of the economic downturn. The governance of Mohammed Al-Saleh highlighted the central bank proactive approach, utilizing all the available resources to mitigate the pandemic effect. Initial data show a rise in headline inflation from 1.1% in 2019 to 2.1% in 2020. The unemployment rate showed an increase at 3.33% in 2020, a 1.14 decline from 2019, underscoring a broader socio-economic impact of the crisis. The Kuwait dinar experienced fluctuations in 2020. The exchange rate in 2020 is 0.31%. There is a previous year in 2019, which is 0.30%. Kuwait GDP in 2020 was USD 105.9 billion, marking a 3.8% reduction from 2019. The dip, the first since 2016, reflect the economic challenges faced by the nation.
Central Bank took actions and steps to strengthen the pillars of confidence and enhance the capacity of national economic sectors to face the impact of the repercussions of global economic and financial crisis. One of the most prominent actions and steps taken by Central Bank Kuwait was the unprecedented cuts in the cost of borrowing in the local economy, thereby providing more room for local banks to do its part in providing the funding requirements to the various local economic sectors. By examining the primary issue of macroeconomic, the GDP of Kuwait after the financial global crisis was increased to $154.08 billion, showed that the policy implementation was a success action to Kuwait's economy. The unemployment rate and inflation rate were 2.03% and 4.84% respectively. As an oil exporting nation, its economy is heavily reliant on oil earnings. Oil price fluctuations may have an impact on government revenue and expenditure. Since oil price been high in 2011, the government have had more money to spend, which could have led to higher inflation and domestic demand.
So next, because of the price oil drop, government reformed the fiscal policies to boost economic growth. One of the fiscal policies are introduced value-added tax, eliminating subsidies, limited expenditure, and expanding non-oil income. The government introduced the Public Financial Management Committee and the Government Financial Management Information System to increase budgeting. From this, the non-oil sector's GDP increased from 46.5% in 2015-16 to 48.8% in 2018-19. Inflation decreased from 3.4% in 2015-16 to 0.6% in 2018-19, and interest rate decreased from 2.3% to 1.9%. The current account balance stable and capital inflow surge. Foreign reserve increased from 28.2 billion in 2015-16 to 39.3 billion in 2018-19.
Kuwait responded to the COVID-19 pandemic with a fiscal and monetary policy. The increase of oil output and the price. Kuwait economic growth is 137.38 billion in 2021. For the fiscal policy, Kuwait government invested Kuwait $275 billion in 2001. This include healthcare support, financial aids and wages subsidy, accounting for 1.5% of the GDP. Despite attempt to resolve political differences, the fiscal deficit climbed to 16.6% of the GDP in 2021. Moving to the monetary policy, Kuwait Central Bank swiftly reduced the policy rate from 2.75% to 1.5% in March 2020. Referring to the economic indicator, while Kuwait economy recovery, its challenges persist, inflation rate to 3.4% due to the global financial chain disruptions, while the unemployment rate slightly decreased to 2.82% in 2021 from 3.3%.
In conclusion, the Kuwaiti government's comprehensive fiscal and monetary policies and later policymakers have been very successful at dealing with and easing economic problems. The historic drop in interest rate in 2011 and smart fiscal move to broaden the economy led to a big rise in GDP after the financial crisis. After that, the government's fiscal policies, especially those made in response to the drop in oil prices and the COVID-19 pandemic, show how flexible it was. The strategic approach, which includes changes to taxes and subsidies as well as growth in non-oil sectors, has led to some big wins like a drop in inflation from 3.4% in 2015-2016 to 0.6% in 2018-2019 and a drop in interest rate.